Ladies and gentlemen, please welcome your moderator, financial editor at the Wall Street Journal, Dennis Berman.
All right, I don't know if we're going to be able to live up to the standing ovation of the last session, but we will try. Let's get right to it. This panel is about black swans, white swans, gray swans. I still quite don't understand what each of those terms means, but we'll try to understand it. I think the bias for a lot of people is to think of a black swan as a negative event. Could each of you perhaps talk about a black swan that is a positive event that we might want to think about as it relates to global growth in the global economy? Nouriel, you want to start?
Well, I would say on the positive, there are all these new industries of the future, ET, energy technologies, BT, biotechnologies, IT, information technologies, MT, manufacturing technologies, FT, fintech, and so on. I would say even defense technologies in a world where defense systems are becoming high-tech. And people say they're going to change completely the way we live, work, and so on, robotic, automation, artificial intelligence, augmented, whatever not. We have not seen at the macro level the increase in productivity. Some people say it's mismeasured. Some people say there's a delay between the time you innovate and you see the results. But that could be the real upside. But there's also a dark downside to it, because as we know, the rise of these technologies, capital intensive, skill buys, labor saving. So where are going to be the jobs and the incomes of the future in a world where trade technology is leading to rising inequality, and then this backlash against technology, globalization, and so on. So the positive could turn out to be politically a nightmare down the line.
All right, Mr. Perot, your best view for the optimistic side.
Well, the optimistic
Yes.
is, money stays cheap. As a real estate developer, we like that. So cheap money, cheap energy is great for the world, a huge stimulus for the world. And I don't see energy prices getting really higher than $50 to $60 for a while because of the technology in the oil field. And then overall, the world is relatively peaceful. If you look at the history of mankind, this is not a bad time in our history compared to, there are not any major wars, there are a lot of skirmishes, a lot of conflicts, but if the world and our leaders can keep the world glued together, we should have a very nice future.
Well, firstly,
right,
congratulations, Dennis. You got Nouriel to be optimistic for a minute and a half at the beginning of the session.
He couldn't help himself, though.
He couldn't really. You encouraged him.
But your view there.
On the positive side, technology is wonderful. There's lots of great things going on. You heard on the cancer research side from Vice President Biden earlier. There are just a lot of things like that that are positive. However, as has been said, technology also means bad implications for the job market, leading to populism, leading to disruption, leading to anti-trade feeling. If the bad side of it can be contained and the technology continues advancing, then I think we would have a surprisingly good next few years.
Bill, you're in the markets every day.
Well, I think that that government policy, monetary policy, and now perhaps fiscal policy has come to the rescue as usual, and has stabilized growth, has lowered volatility, and provided the impetus for higher markets, which to a considerable extent financial-based capitalism depends upon. So good job so far, but going forward, I think we have problems with that model.
Okay, so let's get to that model. One thing that I've been thinking about is the book Lords of Finance. Maybe you guys have read it. I'm sure you have. A lot of people in this book have, or in this audience have. In some ways, the people of that time, the central bankers in the 20s and 30s, could not see themselves at their moment of history. Might we look back at this period, say starting in 2007 to today and past today, and have a sense, wow, they didn't get it. Yes, they solved the immediate problem, but they created a realm of problems thereafter, largely via central bank intervention, that we don't truly understand ourselves today.
Yeah, I don't think it's really monetary policy that will cause that historic shift. I do believe, however, we are in a bit of a historic time that will be looked back at as very important. My point here would be, 150 years ago, it took 60 or 70% of the workforce to feed us. We now have about 2% feeding us, and we've got more food than we know what to do with. You went through a period when the mass employment was manufacturing. Basically, that's all going to be done by robots before very long, and already a lot of it is. even in services, technology can actually replace the human. You know, I made a bank transfer the other day and didn't touch a human hand. You know, it's all on the web. It's all on even telephone banking if you're going to be primitive. So the employment consequences are enormous. What will people do? I believe they will do things, but I believe that education is so critical to these. That's why I love the title about meaningful lives on this conference, because the substitute for old work patterns is going to be a hard thing to find.
Bill, are we living in our own Lords of Finance unreality that we just can't quite see?
Yeah, I think we are. I hearkened back 6 or 7 years to Jim Cramer, where he said, they know nothing, they know nothing. And in fact, they didn't know much. And I wonder today whether they know that their old models, whether it be the Taylor model or the Phillips curve, whether they haven't been displaced or replaced by new models in which we live in a world of negative interest rates, a world in which savers, institutions, in terms of their business models, I'm talking about insurance companies, talking about banks, talking about pension funds, which at the margin are going bankrupt. I wonder whether central bankers know about the negative aspects of low or even negative interest rates. They ultimately, in my opinion, can be destructive and are being destructive at the margin, and ultimately central bankers cannot keep doing what they're doing.
Is there a distinct moment of reckoning that comes from that?
Well, the moment is more difficult. I don't see a layman type of moment, a Bear Stearns, type of trigger in terms of this type of world. It's more at the margin and more gradual as these business models are destroyed, and ultimately, as mom and pop in Des Moines, as small savers saving for their retirement with an inability to earn what they think they require, are marginalized, and growth itself is reduced. So I think central banking must come to grips with the fact that they went too far, that interest rates are negative in many parts of the world, and that ultimately capitalism can't thrive on negative or low interest rates.
So we must raise rates now.
Well, gradually, yes, and of course we have been, but I think ultimately we need a higher rate in order to rebalance investment and savings.
Jim?
I agree 100% with Bill about the negative effects of persistent low interest rates. However, I don't think it's so easy to fix, and I don't think it's really all about central bank policy. Technology means that capital investment is much more intensively used now than it used to be. To me, that's the real story behind the global excess, structural excess of savings over capital investment. I think that's going to persist. I don't think increased demand in the economy is going to make capital investment exceed savings, because I think there are all sorts of reasons why savings are high on a worldwide basis. Yeah. So I think you have excess capital chasing opportunities. That tends to sound to me like something that'll keep rates pretty low.
Nouriel, you agree or disagree?
No, I do agree. We live in a world in which there is too much supply of goods and services, not enough aggregate demand. There is too much savings, not enough capex and investment. Therefore, the equilibrium both short and long-term real interest rate and nominal is low, nominal because inflation is low, and therefore these unconventional monetary policies are the consequences of the fact that we are stuck into whatever you call it, new normal, great deleveraging, secular stagnation, different people call it different way. And the reality, by the way, is that unconventional monetary policy are going to come back. I mean, take even the best example. The Fed is exiting now zero policy rates after finishing QE, as opposed to SMB, BOJ, BOE, ECB were still unconventional. Even if we normalize rates, the new equilibrium is going to be maybe 3%. It used to be 5.25 in the previous cycle, 6.50. So once a recession is going to occur, you're going to go from 3 to 0, you're going to hit the zero bound, and you'll have the same dilemma we have today. What do you do next? You're going to do more QE, you're going to go into negative policy rates, you're going to have to increase your inflation target from 2 to 4, something no central banks wants, or you're going to follow the BS and say the new normal is zero inflation, we should go towards zero target rather than 2%, but most central banks believe that's going to lead to a debt deflation and so on. So choose your poison. Soon enough, there'll be a recession. Once we're in a recession, we're going to be the same debate as before. So this unconventional monetary policy, whether you like it or not, and there are side consequences, are here to stay. for a long period of time. Even in the best case scenario of the US is currently normalizing, let alone in Japan, let alone in the UK, let alone the eurozone. That's the world we live in.
And is there a distinct moment of reckoning? Is it when the economy goes back into recession?
Well, if we go back to a recession, we'll have to address this recession. We're going to do more of the same. In my view, monetary policy became the only game in town only because we're not willing to use fiscal policy and the right type of fiscal policy. The one increases both demand and supply, like infrastructure. There's been a suboptimal policy mix. If we're going to have another recession, politicians will have to do something about it. Everybody says we need to do structural reform to increase potential growth. Those occur only slowly. If there is a shock to aggregate demand, we'll do a combination of another fiscal stimulus and then monetize it through unconventional monetary policy. That's going to be the outcome of it, because the alternative is recession, depression, deflation, debt deflation, and destruction of value. It's worse. So you have to think about these unconventional policies, but also what's the alternative? We've not done QE, we'd have a double dip or a triple dip recession. Guess what? Slowly, slowly, US got out of it, Japan is getting out of it, Eurozone is getting out of it. The alternative in the Eurozone 2 years ago was deflation and double dip recession. So you have to think about the alternative when you say these are negative. There are side consequences, but the alternative would have been worse. So was the second best policy.
But with population growth where it is and productivity growth where it is there any way out? Are we just stuck?
Well, population growth is going to imply that potential growth is lower. So if you do structural reforms of one sort or another, then potential growth is going to increase. The problem is that today there is a populist backlash against trade, against migration, against globalization, even against technology, these capital-intensive, skill bias and labor saving. And the risk is that if you're going to go in the direction of these populist policies, then eventually potential growth is going to be negatively affected. It's not just Brexit or Trump or the referendum in Italy. You have a bunch of populist, authoritarian strongmen, even in emerging markets. It's Putin in Russia, is Erdogan in Turkey, is Kaczynski in Poland, is Duterte in the Philippines, is Orban in Hungary, is Maduro in Venezuela, and I could tell you a whole bunch of other examples. The world is going in a direction that is actually opposite to the kind of economic policy going to increase potential growth. Why? Because trade, globalization, migration, and so on lead to greater growth, but they also lead to greater inequality. We forgot about the losers, and we did not compensate them, and we did not train them and give them the education and skills to survive and thrive in this globalized digital economy. Guess what? These guys are getting organized, and around the world there is this backlash politically, but it's going to lead to populism. It's always leading to economic disaster eventually. That's why in Latin America, where they had populists, right now they're not populists with the exception of Venezuela, because they've seen the lesson in Chile, in Argentina, in Brazil, in Peru,
All right,
and so on.
someone's applauding out there for economic disaster.
Sorry, Dennis,
I don't know
you couldn't
why.
You couldn't keep him optimistic, but you tried.
Did any of you guys predict Trump? Any four of you get that one right?
No?
Trump?
Not really.
No.
I'm very negative, but
Yeah.
You're very what?
negative about Trump.
Okay, so
I gave him a 50-50 chance in the run-up.
the mood in the Milken conference, I would say, is, hey, this Trump stuff sounds great, but we don't quite believe it. I've heard lower for longer more these 3 days than I've heard in the last year.
Yeah.
So are you guys believer in that Trump might be able to, in his own unique way, be able to shake the system up and perhaps get some of the growth or even the productivity or the mentality growing in a way that was not possible before?
Well, to my way of thinking, Trump economics it is somewhat akin to the Laffer curve and the belief that deregulation, perhaps, but certainly tax cuts can lead to higher growth, and that the inherent deficit from it can be paid for from that type of growth. I don't think that was the case in the Reagan era. I don't think that will be the case now. Yes. I think it will be the benefit of corporations and to the benefit of wealthy individuals, and just the opposite of what Nouriel was talking about in terms of the potential populist trend that lies ahead. So, Trump economics, to my way of thinking, won't work simply because the problems of the global economy, the problems of the U.S. economy are more structural in nature. They're related to demographics. Right. They're related to too much debt. They're related to the displacement of labor by technology, which the job-creating dogma of Trump has nothing to address. And,
right.
And so I look 4 years from now for a U.S. economy to have grown at 2% or perhaps a little bit less, but not the 3% that markets seem to require.
So let's say you get a call. There's on your phone. There's a Palm Beach area code on your phone. Bill, these guys aren't getting it done. I'm throwing out Mnuchin. I'm throwing out Cohn. I want you in charge. So what's the plan?
Well, the plan to a certain extent, Nouriel's mentioned it, I agree with it. When monetary policy is exhausted, then fiscal policy must fill the gap. And the question becomes, though, as Republican orthodoxy would maintain, and to a certain extent common sense would acknowledge, that government spending is less efficient than private spending, and that always is the rub. But if you have a growth gap that requires to be filled, that requires more jobs, then the government must step in some form or fashion, to fill that gap. I don't think it's through lower taxes for the private sector and for the wealthy, but it must be through some government infrastructure, government-related programs that productively improve the economy.
Isn't it amazing that even 10 years after the crisis, we're still here saying the government's got to step in one form or the other?
Well, we learned that, or we think we learned that in the 1930s, right? They did have to step in.
Yeah.
Right.
And Keynes was right to a considerable extent. It doesn't mean, that government spending is always the solution, but certainly if you're looking for and require 3% growth and you've only got 1 to 2, and monetary policy is exhausted, then yes, the government's got to jump in there.
Ross, maybe we just have to rethink what our standard of living is as it comes to entitlement.
Number one, we have to grow.
Right.
The economy has to grow. And I think a lot of these issues with high growth, Bill says 3%. I still love 4%. Why not try for 4%? And let's really make the American system run the way it needs to run. And I think the low tax, low regulation, the Ryan plan, the Brady plan, when you hear those plans and spend time with both those men, those are very competitive plans. When Brady says his tax program will take us from the 31st least competitive nation in the world to the top 3 most competitive nation in the world, that's where our tax code needs to be. We need to attract capital from all over the world. It should be easy to bring money to America. It should be easy to hire Americans. I mean, why put all these blocks in front of hiring American labor? Labor should be easy. We should encourage growth. And there's a labor shortage in the nation. In my industry, real estate, we can't find enough people to build homes, build buildings. We're 19,000 construction workers short in Dallas-Fort Worth right now. We badly need an immigration bill. We badly need our friends from Mexico to come back and go to work, because that's what's going to drive this economy. You've got 3 million job openings in the United States right now we can't fill because of skill shortage. Yeah. You've got to get labor retrained for the modern skills. So I think with growth and with optimism, this nation will still continue to be and grow the way it should grow.
Given what you've seen out of Congress in the last few months, do you believe that's possible or not?
The Freedom Caucus, I'm shocked. Why they would stop the Ryan plan, I'm not sure. And I think that's the biggest shock. If you want a little, maybe it's not a black swan, maybe it's a black chicken, but that's the one that surprised me, is that how could this group who wants to have a conservative agenda literally throw the whole agenda off? So when you throw off health care, you throw off the tax code. Yeah. Health care was going to create $1 trillion savings that was then going to roll into the tax code to allow corporate taxes to come down lower. So if you look at the methodology for them to throw it off and then do the tax code cannot be as aggressive as it should be without welfare and entitlement reform. So that's where I was shocked and surprised, and not being a politician and just a businessman, I'm not quite sure why you have the turmoil you have, but that is our political system.
Nouriel, you're itching to get in there.
Well, I would tend to agree with Bill Gross that potential growth is dependent on factors that are not going to be affected by policy. I think markets are really overestimating, what is going to get done and to the impact on growth. Not much is going to be done. If you take the tax reform, if you do it revenue neutral, it's mission impossible, since you don't have the BAT or the savings from healthcare. If you don't do it revenue neutral, then you're going to have runaway deficit, going to increase interest rates, and the dollar is going to crowd out the recovery, just to give you an example. And secondly, most economists would suggest that maybe even if you do realistic things on deregulation and taxes, potential growth from 2% may go up to 20 to 30%. I don't see any serious economists ever around would say that we can go to 3%. That's just absolutely
And so
not.
Ross's
And I
view
think
of
that the
4.
markets are also underestimating the negatives, at least 4 dimensions. First of all, the policy mix is going to be a fiscal expansion and economic growth to full employment. It's going to push up the dollar and long rates. It's going to force the Fed to tighten sooner, faster, and more, pushing long rates higher and dollar higher. And that's going to hurt the jobs and income of the white blue collars who are going to vote for him. Secondly, there is a risk of protectionism and trade war, especially then if you have this tightening of financial conditions through the dollar. 3, the restriction to migration is not just people from the Middle East, but also H-1B visas and so on, implying an economy where we have aging and labor force participation is falling. To increase potential growth, you need more migrants, not less of them. We're going to restrict migration. That's going to slow down potential growth. And fourth, and most important, in my view, is telling essentially the corporate sector what to do, where to hire, where to invest, where not to invest, what to do. As a form of micromanagement of the corporate sector, the Ned Phelps, Nobel Prize winner from Columbia University, called it seems like corporatist Nazi Germany or fascist Italy. I mean, if Obama had said 1/10 of the kind of things he bullies the corporate sector, he will be accused of being a Bolshevik communist. But Trump goes around and says this thing, and they all shut up because they're all sycophants when they're really worried about this kind of policies. So you combine all these things together, the negatives right now are going to emerge over time, and the sugar high is going to disappear, and we're going to see downside effects on economic growth and asset prices.
Okay. Corporatist Nazi Germany. I think Nouriel has a point. Well, you should open that
seriously.
plant. You shouldn't open that plant. I'm going to save these jobs. I'm going to save these 75 jobs.
It's really it's like command and control communist economy or Nazi Germany. That's what it is.
Thoughts?
Literally.
Bolshevism, Nazism, communism? Which word would you all choose?
Or great salesmanship. He's selling America. He's selling American workers. He's jawboning factories to come back. In my business, we've had calls from European companies and Asian companies saying we want to put factories in the United States. I mean, everybody now wants to put factories in the United States and hire Americans.
Yeah.
And I think that's a
so you're
positive
okay-
message.
you're
That's
okay
a
with
positive
that?
And I understand top-down control economy, but I think simple salesmanship.
And if he said to
There's
you,
no problem.
If he said to you, you should build that plant and not that plant, you'd be upset about that, though, wouldn't you?
Depends on the deal.
Yeah.
Okay.
I mean, what's the deal? Where are we going? I mean, there's a lot of
As
factors.
a statement of principle,
For
though.
GM and the other automakers survived because they were able to outsource to Mexico the low value added, labor intensive parts, and now they can compete with China, European, and others. If you don't allow that, you're going to damage them, and eventually you're going to make them less competitive. I mean, trade has helped them all to succeed, survive, and thrive. That's the reality. Same thing with migration.
Jim wants
And
to
instead,
get
we're
in there.
micromanaging what they do, as
Jim.
I said.
The thing that can prevent populism turning into 1930s style totalitarianism is policies which allow people who are forgotten right now to get back into the economy. It has to happen. Ross talked about how hard it is to get construction workers. Very important comment. It's a national phenomenon. There are all kinds of good jobs, and these are not PhD jobs. These are pretty normal jobs that can't be filled by employers at the moment. And yet you've got to talk about bring the jobs back from both sides of the aisle. Both candidates in last year's general election had a whole thing about bringing back manufacturing jobs. Who's going to do them? You have a dichotomy at the moment on policy between the Federal Reserve. They think that the economy is running pretty close to capacity. That's actually pretty clear from all the spokespeople from Chair Yellen down. On the other hand, the administration think they can juice growth to 3 or 4%. I agree with Nouriel, that's likely not to happen except for maybe 2 or 3 quarters at a time. It will not be sustainable, it would be boom and bust. So how do you fix this? I think the big mistake that governments on both sides of the North Atlantic made in the last 15, 20 years is not to do anything about the displaced people who have lost those good manufacturing jobs and have nothing else to do other than sit and watch television and get high. I'm afraid, putting it bluntly, that's what's kind of happening. and people are withdrawing from the workforce. You can't force people to come back in the workforce, but you can make it easier, and you can make people
Okay.
have
Can I
opportunities.
make
wait,
one
wait,
point?
One moment. So you get a call. It's Palm Beach area code.
Yep.
Guy on the other line
that's
says,
Bill calling
says
me.
Bill Gross didn't work out.
Oh.
I need someone new.
I'm not sure I'd
So it's
take-
easy to say, yeah, well,
Yeah,
we need
no.
to do things. We have to retrain in education. Who's opposed to that?
But
But really,
Yeah.
as Mike Milken said on the screen earlier, AI and technology is really driving these jobs. It's less immigration. It's much more technology. So what's one to do?
It's absolutely technology. And that's why new skills are so important. And there has been, the only vision I see in reskilling people is actually in the private sector. The government can help. And as Bill said, it should help in areas like this. But education needs a fairly heavy-duty reform. There are countries that you can look at who do it better than we do or than many European countries do. I'm thinking here of the German apprentice system or the Asian, very tech-oriented education. Reforming in those directions, it won't be a quick fix in the term of one president, but it could make a very big difference over the next decade or two.
All right. Nouriel, do you want to add anything?
No, I do agree on the point that, while people blame trade, migration, globalization for the job losses, in the next few decades, technology, automation is going to destroy many more jobs than trade. I mean, think of it this way. Suppose you put a wall and no migrant comes in. Suppose you have a wall of tariffs. In the 48 out of 50 states in the United States, the #1 job is truck drivers, and you have now millions of Uber drivers. These are all domestic jobs, nothing to do with trade or migration. Sooner or later, whether it's 5, 10, 15 years, we'll have driverless trucks and cars. 5 million Teamster jobs gone, millions of Uber jobs gone, and all the economy related to the truck stops gone. That's what technology is going to do, and unless we do something about it, whether it's education, retraining, skills, even providing subsidy to those who work, who are being displaced, or providing them eventually universal basic income, something needs to be done. Otherwise, the tsunami of a backlash against globalization is going to become totally overwhelming.
Mark Andreessen has a line. His line is, in the future, there'll only be two types of people. Those who program the machines and those who are programmed by them. You would agree with that?
Well, eventually, I think that longer term, most likely, most jobs, I mean, they already started saying the next 10 years or 20, 47% of US jobs are going to be displaced by robotic automation, will have an issue. And there is this debate on whether the future is utopian or dystopian. The utopians say this thing has happened in the past, we're going to create new jobs of the future, whatever not. The reality is when the job went away from agriculture, they went into manufacturing. When they went from manufacturing, they went to service sector. When there was manual jobs, they went into thinking jobs. But now the machines are becoming thinkers, and they're also taking over service jobs. Most of the service jobs are going to be also destroyed by technology. So I'm not sure, by the way, what's going to happen. Now, John Maynard Keynes said, don't worry, because if technology reduces jobs, we'll all work 10 hours, and the rest of the time will be leisure, poets, writing, and doing artistic stuff. The reality, however, is that technology is capital intensive, skill bias, and labor saving. So most people here that are in the top 20% distribution of skills probably going to continue to work 60, 80, 90 hours, even 100, because they're doing well, while the rest of the society is not going to have any jobs or income. So it's going to be a dichotomous labor market where those who have skill and are creative and productive, have human capital, can even use the AI to improve themselves, are going to do well. The rest of it are going to be drift. Yeah. And then there'll be a political backlash. That's the challenge.
Jim disagrees.
I disagree. I look at most tasks, and they can be done by a person, they can be done by a machine, but they'll be better done if both work together. And I think the challenge is, how do people and machines work together to do all kinds of jobs? From chess, where the best chess in the world isn't played by a person anymore, it's played by a person using an AI system, to portfolio management, where we've been wedded to our systems for a long time, and they're getting better because of use of modern technology, data technology. So I think the challenge here in education and persuasion is to find a way for people to work with the machines, not against them. So I completely disagree that Mark Andreessen's comment is inevitable. It only happens if there's bad policy.
Well, you know, those who have skills are going to be able to use AI to become even smarter. I mean, look at the digital revolution, where the digital divide. Those who knew how to use the computers did well. Those who didn't know how to use them drifted away. Now, in a world in which you have AI, unless you have the skills and then you become really much more productive, you're going to be drifting in a situation in which your jobs are taken over and you cannot use those skills. I think that's the risk, that we'll have a new AI-driven digital divide like the previous one.
I was struck by the comment from a friend in AI, we will make the machines so easy to use, anyone will be able to do it, which suggests that a person can work out the objectives better than the machine does. So the person using the machine will be a lot more powerful at all levels if it can be properly constructed.
And whole new industries will be formed.
Exactly.
We will figure all this out. From the beginning of man, we've had this technology challenge. We will figure it out if you let the American people keep their freedom, keep entrepreneurial spirit, and get the government out of the way. We can figure it out.
But that sounds so, sorry, but that sounds so hokey.
Yeah, but I think it's far better than the doom and gloom.
We need the benevolent
When I look at
policies.
the industries that have formed and the jobs are being created today, these are industries that 10 years ago, as a developer, we never thought about. We never thought about an Amazon. And now we're putting millions of square feet of Amazon buildings across the nation. Never thought about a Facebook. We're now building data centers for Facebook. So I look at all the new industries that come with the technology and the jobs that are created. I think the society will have to figure it out.
But the labor intensity for $1 of capitalization for a Facebook is so off the charts. Facebook is a $400 billion company. I think it employs 20 or 30,000 people.
Right, yeah.
It is insane. The computers are doing the work, and there's a small group of managers who are getting insanely wealthy, and it's not really being
Can I
distributed.
just mention one critical factor here in terms of your view of the future? You know, education has become institutionalized. Our education system is broken. You know, people go to college in order to get a degree, not to be trained for the future in terms of technology or whatever. And until you break the university system, okay, that's dependent upon contributions and basketball and football teams and money and money and money, and they teach the wrong things, you know, that the society is not going to improve. They're going to be educated in the wrong direction.
So we have to kill the Rose Bowl to make America great.
That's why.
Who wants to kill the Rose Bowl here?
No, construction, a skilled construction worker in Dallas makes $100,000 a year now. Plumbers, electricians. I mean, this is where the skills gap and the education gap's not training people for the work that
there is a scarcity because during the global financial crisis, all the Mexican construction workers went back home, and now they cannot come back in. The solution to that labor scarcity is in part letting more migration. I mean, 40% of the CEOs in Silicon Valley come from abroad. Steve Jobs was the son of a Syrian refugee migrant, and now we're restricting all those jobs. It's going to have a negative impact on potential growth. I mean, we have this rhetoric that the migrants are stealing the jobs. We have a brain drain. We get the smartest people in the world, or the most motivated, even from poor countries, coming here. And now we want to restrict it. But that's the policy that this administration is going to follow. That's not going to be good for potential growth.
But Dennis, to challenge you a bit on your Facebook example, Facebook's a platform. Things happen on a platform. You and I did a live video on Facebook yesterday. We don't work for Facebook, but that's an economic activity that it facilitates.
Right, we worked for free for Facebook.
Well, presumably somebody thought it was worth doing for money. I mean, we do a lot for free, but there is ultimately you have to monetize content somehow. I mean, that's your business challenge.
Right.
But I'd say on, Apple, the point about Apple isn't Apple making phones. The point is all the app developers, all the communication, all the e-commerce that happens on those apps. And, those are very big impetus to economic activity. And that has to be encouraged and will ultimately, I believe, give us hope.
Okay, let's move on to another topic here. Or Bill, you want to add one more thing?
No, I want to move on.
Okay. Why, I got to ask you, why do we have to get rid of college sports? College sports are fun. People like college sports. What's the matter with college sports?
there's nothing wrong with college sports except that the athletes aren't being paid.
Well, that's
How about
true.
that?
Yeah.
That's true.
But it's the emphasis, isn't it, Bill?
But it's the emphasis, right? You're just
Yeah.
saying it's a distraction
Yeah.
from the true purpose of what it should be.
Well, yes, and the bureaucracy of university education has been allowed to dominate the tenure, the building of infrastructure, and the unquestioning thrust of what we're educating for.
Right. Okay, so let's move on. If you had said a year ago, hey, UK has voted to get out of the European Union, how do you think markets will react to that? I think we would call that pretty much a black swan. It happened, and the effects have been, I would say, relatively adapted by the market at large. Is there something embedded in the EU workout process here that we're not thinking about, either in a positive or negative way, that we should be discussing?
Firstly, a 20% fall in the pound against the dollar has made a remarkable difference. That's what's really kept the economy going, in spite of the self-inflicted harm of Brexit. The euro has also, over that whole period, been quite weak. So that has really been a big stimulus to economies that are otherwise running big risks with the disruption to trade that Brexit may produce. You know, currently we're seeing the discussion getting more and more bitter. But we're also seeing with the British election in the fall, we'll have the German election, they'll all shut down for August. It's going to be next year before they really start negotiating Brexit. And that's very bad news. I think that the market has been quite benign because it's kind of drifted into thinking, hey, it won't be so bad. And by the way, the currency moves make it okay. I don't think that it's really true to say that it didn't have an effect on market. It did. It weakened both the euro and the pound. So I am actually pretty apprehensive that if the negotiators can't basically keep trade going as it has in the single market, you may see some really bad stuff go on in Europe.
Like what?
Well, like if it causes growth to slow a lot or even get into recession, which it could, then you'll have stress on the financial system. And it's pretty clear that European banks remain undercapitalized. I mean, several of them have a big capital issuance in the last month or two, but it ain't enough. And they've not properly recognized, you know, we're talking about the financial crisis here, they've not properly recognized the bad debts from 2009.
Do you believe that most European banks are insolvent?
Not
market kind of does.
Not insolvent, but I think many of them would be insolvent if you mark them to market.
Insurance companies? European insurance companies?
European insurance companies, it depends what happens looking forward to rates. But you know, if you're a German insurance company, the regulation is forcing you to have a crediting rate something like 3%, whereas you can earn probably 1% if you're lucky. And that negative spread is consuming their capital fast unless they do something about it. So there is, I mean, Bill mentioned this earlier, very low rates are very bad for life insurance companies. In the US, we've kind of got over that because the rates are not quite so low and there's been more adjustment of policies. But in Europe, it's been very slow. So banks and insurance companies in Europe could, in a trade-induced recession, cause a bit of a Lehman-type event. It is possible. I'm not forecasting it, but I'd give it a decent probability enough to worry about.
Black chicken or...
Yeah, black chicken, 10 or 20% probability.
I worry that actually the negotiation within the UK and the EU are going to lead to a stalemate and a breakdown that might trigger, maybe at that point, a recession in the United Kingdom. I don't think that trade fight is going to lead to a recession in the eurozone, given that the relative size is very different. The UK is only 10% less of the eurozone or the European economy. So I don't think that trade shock is going to lead to a eurozone recession. I think the eurozone has other problems. People are now happy that the Dutch election went well, that most likely Macron is going to win a presidential, that in Germany is going to be the Social Democrats or the CDU and so on. But I think the big elephant in the room in the Eurozone is going to be next year Italy, where this anti-Euro party, Cinque Stelle, unlike Le Pen, is highly likely to come to power. And these guys want to leave the eurozone. And Italy, it's too big to fail and too big to be saved. You know, Greece was a 200 billion euro public debt problem. Italy is 2 trillion. So there is no Troika program can backstop Italy if it goes in the wrong direction. So I think that for a while people were nervous about the political risk this year in Europe, given the French, German, and Dutch election. Now they're having relief. The big issue is going to be next year with Italy. If Italy goes wrong, that could be a systemic threat to the eurozone.
Let's push it out. Let's push it out
more than a trade fight between EU and the UK.
2025 Milken Institute. We're all here in our self-driving cars.
Yeah.
Is the EU, as the current form, still exist or not?
I would say that the eurozone might be a threat. I would not rule out that if you're looking at a 10-year horizon, some member of the eurozone are going to eventually leave. One of them might be Greece, one of them might be Italy, one of them might be Portugal, and there are then 2 scenarios. One, it says once 2 or 3 are out, it unravels the rest, and the other one is the scenario where if France is stable, Germany and the core is stable, and Spain makes it, then you have a Nordic eurozone, and then the periphery or part of the periphery is gone. And I don't know, but I'm not sure that the eurozone itself is going to remain with the current 20 members. I'm not convinced of that. Europe is a different story, whether other country may leave the European Union or not after UK. I'm not sure about that. By the way, one of the side consequences of Brexit is going to be that there could be a breakup of the United Kingdom, because the Northern Ireland are going to decide in a moment to join Ireland, and that's very easy. And the Scotsman decide to have another referendum. So the UK is going to end up being a small England and Wales at best. I think that's a likely scenario.
Well, my simple assertion is that the EU and especially the EZ is a dysfunctional family. There's no doubt that the French are not German and the Germans are not French. And those are just the 2 primary examples of why it's dysfunctional. They have a long history of conflict that takes centuries, if not millenniums, to overcome. And so, you know, the model that they're now working with in terms of one interest rate fits all does not fit all. It does not fit Italy the same as it does in Germany. And fiscal policy is not spread around like it is in the United States. And so as long as, you know, these 2 conditions exist, you might expect for the EU or the EZ to break apart.
So is that your expectation?
It's dysfunctional.
By 2025,
well, I
say...
think at some point, Nouriel mentioned it, Italy's the big chip, and to the extent, yes, that they can get over the Greek hurdle every other year and tag along the IMF, and that's fine. But the IMF is not going to tag along in terms of an Italian bailout, and so we'll see when that moment comes exactly what they value in terms of a union.
I think the feature of Brexit that is inadequately recognized by commentators is the extent to which the exit of Britain changes the political balance within the EU. Basically, the EU has had a powerful lobby, about half of its voters in countries that support free trade and the free market system. With Britain out, Germany, Netherlands, and Scandinavia are on their own. They are outnumbered heavily. And I think the risk is that the political balance of Europe changes quite a lot after Brexit, becomes more isolationist, more protectionist, and less pro-business. And that would be pretty bad news long term. This needs to be watched for. It's not exactly a black swan, but it's bad news for Europeans, but bad news for the world economy.
Some Europeans might say it's a certain liberation from us. We're choked by a centralized state that we don't believe in.
That's true. Philip Hammond, the UK Chancellor, after the Brexit vote, said that the British did not vote to be poorer. I actually dispute that. I think you're right. I think some people vote for the stability, the past, and they don't mind if the economy grows less. And I think that's actually quite a worrying situation, because when they are relatively poorer than they otherwise would have been, they'll notice it. And I think that could lead to future instability. Just a very long-term thought.
Okay, so I've written a list of what I consider some interesting black swans. If you all could maybe just say yes or no, why you think it's possible. Again, these are black swans, so I guess they're not actually black swans because I've thought of them. We can't think of the black swans that truly exist. But let's just go through a few of these, and then are we going to take questions? Maybe we'll take questions in a few minutes. Major warfare, let's call this the next 10 years. Major warfare between either the US, China, Korea, Russia, Iran. Anyone want to take odds on that one?
I'd say very unlikely to be all-out warfare between those big countries, but fought by proxies, sadly very likely. You know, something that would be very bad in a lot of levels would be another war in the Korean Peninsula. That is, unfortunately, it's got a possibility. You know, maybe it's only a 2 or 3% probability, but it would be nasty enough that you have to think of it as one of those tail risks.
Would you put Japan, China in that list too?
Japan, China will spar over the South China Sea and the islands and so on. They don't like each other. It's a bit like Nouriel was saying about France and Germany. You know, the relationship is just historically not good. But I think that they both see that, I think they will both pull away at the brink, put it that way. I would not expect, I think that's very, very low possibility.
Anyone else, Bill, got any thoughts?
Well, you
conflict?
said yes or no. I'd say no, but increased tensions are risk-inducing. It hasn't been the case in markets for the past 6, 12, 18 months, but you would have to expect that investors know that war on a long-term basis may be good for industry, but it's not good in terms of consumption and economic growth. And so the more tension, the more risk, and the lower the price.
Any thoughts? You were just in Asia, Nouriel?
Well, you know, I don't expect World War III and a global war among major powers, but I would say that the kind of black swan scenario one should start thinking about is the following one. We know there is this tension between US and North Korea, and actually my personal view has been that while the administration is talking about a military option, there is not a credible military option, because even if you go and find all the nuclear bombs, they have 20,000 artillery pieces, and they can destroy essentially Seoul. There's half of the population of Korea in a matter of minutes. So what's the alternative? I think that the US is going to try the strategy that it's trying right now of decapitation military of the regime through cyber warfare. There are all these failures of the missiles, and I think many of them are occurring because we are really sabotaging them. Now, North Korea will have to react. How they're going to react to this thing? One form of sabotage they can do is cyber warfare. You know what happened with Sony? We know there's hackers that are sophisticated. What if you have a major cyber attack by North Korea against the financial system and major infrastructures? That's something that will be a legitimate response by North Korea to us sabotaging their thing. So you could have actually cyber warfare seriously being more severe than an actual military thing. Secondly, they don't have the ICBMs right now, and we're trying to prevent them from getting them. What if they send a ship with a dirty bomb to the port of LA or New York and they blow it up, if it gets to that point of escalation? So the Black Swan is not, in my view, a traditional war between US and North Korea, but it might be a massive cyber attack on both sides and something like a dirty bomb attack. That's something that maybe is a tail risk. I don't know what's the likelihood of it. They'll be massive. That's a possibility you have to think about.
Anything there?
I think Tillerson, Mattis, and McMaster will avoid major warfare. We've got very smart leaders on point. The Chinese understand the risk. The Chinese have the ability to get North Korea in line if they really want to, and I think we can avoid it. But your scenario is very valid versus the all-out war. You could have the cyber and the skirmishes.
Is there a cyber Pearl Harbor? Maybe North Korea or someone else. Cyber Pearl Harbor is only a matter of time, right?
North Korea, I'm told, they have the capability of making a massive cyber attack against our major infrastructure, including civilian and the financial sector. They have the capabilities as much as anybody else. They're just one notch below Russia and China from that point of view. They can do it. They've not done it. If we're trying to sabotage their missile system as we are right now, if they're not going to go through a military attack, they're going to use potentially a massive cyber attack. That's a meaningful risk.
Okay,
it will be the very first true cyber war among two powers.
Let's move on our lightning round of wonderful human events. Collapse of Saudi regime?
Unlikely, but it's a tail risk. You know, the interesting thing, if you look at the Gulf, is that the real oil-producing countries, mostly along the south, from Kuwait through the UAE to Saudi, those have stayed actually remarkably stable, partly because they're quite well armed and their government has managed to look after the welfare of their people. So with the exception of a small outbreak in Bahrain, the stability there has been quite good. The fighting in the Middle East, in Syria, for example, is a long way away from where the oil's produced. So it's a remote chance that it affects oil. But if you had a collapse in the Saudi regime, it would depend what replaced it. I mean, but the regime is so widely solid in the population, it's a very remote tail risk in my view.
My worry about the Middle East will be that there is right now a proxy war between Sunni Saudi Arabia and its allies in the Gulf and Shia Iran, and is leading to those proxy wars, to civil wars in Iraq, in Syria, in Lebanon, in Yemen, in Libya, and this might be like the European 30-year war between Catholics and Protestants. And so far, it has not disrupted the supply of oil anywhere, because it has not led to a shock to the supply of oil in a major producer. If anything, we have a glut of oil through shale gas and oil revolution. But suppose that this war spreads over time, could we be in a situation like 1973, Yom Kippur War, 1979, Iranian Revolution, 1990, Iraq invasion of Kuwait, in which actually a major producer has a shock to its supply. And then you have a spike, stagflation or stag-deflationary of oil prices. I think that's a risk, because this war is going to continue for the next 10, 20 years. We're not even able to resolve the Syrian one, and you have now the 5 countries that are failed states, and you might have more failed states. So, and we have no strategy, not us, not the Russians, not the Chinese, not the Gulf, about how you deal with this mess. There's absolutely nobody knows how to resolve it.
Okay. Moving on, collapse of Chinese regime. It's fun thinking of this stuff.
Yeah, it is.
In theory, at least.
Yeah. This one is a question of when. President.
When, not if.
When? No, I think there's an if and when. But
Okay.
when do you think it might even happen? I think the chances in the next 5 years are virtually zero. President Xi has accumulated power so effectively and so subtly that his second term looks pretty well organized. However, there are issues in China around losing jobs to technology. There are issues in China around bad debts and excessive credit. In a sense, it's a question of how long the credit markets in China can pretend and extend. I'm making the case that it's at least 5 years, maybe 10. I find even though most of the China experts are fairly optimistic, think there will be a reckoning on credit somewhere within 10 years.
Bill,
so I don't think it's a collapse of the regime, but I think it's a financial crisis.
collapse of the credit. Bill.
Well, you know, when I look for problems, and you talk about China, I look to leverage. And, you know, certainly China has levered up dramatically over the past 5-10 years. They're close to the United States in terms of debt relative to GDP. They're growing credit at a 20% annual clip, and their nominal GDP is growing at perhaps 10 to 11. And whenever you have that type of gap between credit creation and nominal GDP growth, you have potential problems. We all know, we all read at least, that in China there's a huge culture of underneath the real economy, shadow banking, so to speak, that we've had in the United States for a long, long time. There's guarantees upon guarantees, and no one really knows, you know, if something happened, who stands behind those guarantees. So the financial system in China ultimately, and perhaps soon, you know, is subject to not collapse, but subject to stress, and that in turn stresses the real economy.
Yeah.
China's aging with the one-child policy.
Right. And your thoughts on China's stability overall? Any?
Same thing. I think with Xi, you've got 5 years. You do have a debt problem. You have a demographic problem. You have all those young men that won't have a wife. And so if they don't have a job, they don't have a wife, then you could have social issues, and that's what the Communist Party is going to have to deal with.
Okay, let's.
But if I could add one thing, the mainstream view and the Chinese view, they have 5-10 years to do the adjustment, and things are okay. But the way they stabilize growth for the last 2 years, when there have been a shock risk of hard landing has been new rounds of credit fuel. Fixed investment means more bad assets, more bad debts, more leverage, more overcapacity. Growth is going to be stable this year because the party Congress, the currency is stable, the stock market is stable, but by next year, after the change of the standing committee, either they start the reform they need to do and the rebalance, or eventually, I'm not sure they have 5-10 years. You could have in the next 2-3 years a financial crisis in China, a real hard landing, and if you have hard landing in China, first you have domestic political instability, and once you have domestic political instability, there'll be, like in the US, the attempt or the temptation to wag the dog and find a foreign currency crisis of some sort. They could go and start a war with Vietnam or Japan or you name it. So that's a sequence in which if you have a hard landing of the economy and a financial crisis, it leads to domestic instability and that leads to foreign instability. I wouldn't say it's my baseline scenario, but I don't believe they have 5-10 years. They've kicked the can down the road for the last 5 years. He was supposed to do the reform. He put them on the back burner because he was cracking down on corruption and establishing his power. In the next 5 years, he has to deliver on the rebalancing reform. If he doesn't do it, they're going to hit the brick wall before those 5 years.
Okay, next one. Armed conflict in the United States. Anyone want to take that
Within the United
I
States.
don't see that.
In the United
one? This is
States?
Black Swans.
Yeah.
Let's go for it. No.
I think it's
Armed
unlikely.
conflict in the United
The
States.
US
Armed
is so
conflict in the
different
United
from
States.
Europe, Dennis. Americans think they're Americans. They don't think they're different regions. And I think that the sense of national identity is strong enough that you'd find it very, very unlikely. I would say that's not even a black swan. It's almost zero.
Okay. I hope that's the case.
I hope it's true.
Chicago Cubs winning the World Series? That's never going to happen, right?
No, never.
Nouriel, sorry, back to your point.
No, on the US, of course, you could stay stable. I'm worried that really trade, globalization, migration, you name it, technology has led to a divided society. There are winners and there are losers. And the losers are getting organized, was those who voted for Trump, but also those who voted for Bernie Sanders. And I fear that while the rhetoric of Trump is populist, he's a plutocrat. His healthcare plan, his tax plan helps the 1%, doesn't help the white blue collars are going to vote for him. And eventually, that backlash is going to become more severe. So if he doesn't do something about the economy, next time around, you're going to have a real populist as opposed to somebody who pretends to be a populist who's a plutocrat coming to power. And then you could have real economic and social malaise down the line.
Okay.
Because, you have to give something to the losers, and I'm not sure his policy going to make any difference for those who have lost from globalization. Frankly, you have to invest in education, in skills, in infrastructure, in lots of things that are not being done. I mean, 90% of the benefits of the tax cuts are going to go to the top 0.1% we see here. Nothing's going to go to the poor. That's not the way of rebalancing the economy.
Let's try to end on a hopeful note. Armed conflict, regime change. Bill, give us one thing to be inspired by. That's one of the mantras here. Inspired by about perhaps the future.
Well, that was your first question. Now it's your last. I know. There's an old phrase from an old gentleman in the late 1920s called Bernard Baruch, and he said basically that 2 + 2 still equals 4, and you can't keep mankind down for long. And I think that's true. The human spirit will ultimately carry the day. The problem being in the interim that institutions and incorrect policies may muck it up for some time.
Anyone last? Ross, you want to go for that?
I think I'm very excited about North America. And just, we look at the benefits to North America, the ability, if we can really pull these three countries together with the labor force in Mexico, the demographics of Mexico, into the United States, the energy of Canada, the growth of Canada. I mean, anything we can do to continue to integrate North America gives us a great trading advantage around the world.
Yeah. Health and life expectancy have never been better. Technology can enable us to do things we could have only imagined a decade ago. There's never been a more exciting time.
Okay. I hope you can join me in thanking our 4 guests today. Thanks.
Well, you were good. 0. You did just right. You're a pro.